2025 real estate market. Woohoo! Some are saying we're heading for a massive housing crash, and others are saying that the market's about to skyrocket again. So if you're here for sugar-coated predictions, this isn't the place. The truth is, neither extreme is likely. That's in my mind. So instead, I think we're going to see a shift toward a more balanced market. But the kicker is not the same story everywhere in the United States. So I'm going to break it down for you because understanding what's happening now can help you make better decisions tomorrow. Okay? I think the stakes are pretty high. Your equity, your investment, and for buyers, whether now is the right time to make that move, it's really important. Now, how do I know all this? Well, I've had the highest number of calls ever for December of any year ever in the last 31 years, inquiring about selling their home and buying a home. And what should they do? Should they do it now or should they wait? Wondering, asking me, Diane, what the heck's going on out there? We need your help. So there's a lot of questions out there, and I know a lot of you have that desire to know what's going on. Well, let's talk about numbers. I like numbers. Data shows that things are happening. So these facts, they tell a story, and when we dig into the numbers, it's clear this isn't the wild market of 2021 or 2022. We all know that, right? The Federal Housing Finance Agency, that's FHFA, they reported a 4.3% increase in U.S. home prices from third quarter 2023 to third quarter 2024. You see that in the graph. So now, for some people, that might sound like solid growth. But when you compare it to the explosive double-digit gains of the past, it's a little bit of a slowdown, a slower pace. I think it's healthy, and it's cooling off the overheated market without causing a real meltdown, because for sure we don't want to see a meltdown, okay? So I looked at the National Association of Realtors, NAR, so their numbers, and they found that the median home price hit $406,100 in November 2024. And that was up 4.7% year over year. But the kicker is that sales activity increased by 6.1% compared to last year. So what does that tell us? It tells us there's demand still there. Buyers haven't thrown in the towel yet because of higher rates. Now, I could have told you that because I had several houses go on the market and I had several offers on each one of them. They're still out there. Buyers have not thrown in the towel yet just because of these rates. So it's not a free-for-all as much as it used to be. I think buyers are more intentional, they're more selective, which means sellers need to adjust their expectations or do better staging and pricing. Because I think, bottom line, a well-staged, well-priced home will sell in any market. And lastly, I looked into CoreLogic. I like using their number. They forecast a 2.4% increase in price between October 2024 and October 2025. That's kind of slow, but it's a steady growth. It points to, I think, a more sustainable market, not a boom, not a bust. And also they predict prices will peak in April 2025, but not in a way that signals a bubble, more like a natural high point before leveling off, like they do every year. I think we'll get back to a normal April, and I look forward to that. I have several really nice listings coming up for my April market. So if you're planning on buying or selling, these numbers are really worth paying attention to because they signal stability. So you need to do some things to your house so if you want people to buy it at a really good price. So let's talk about those people who believe a boom is coming and explore the argument for this housing market boom, say. So there's three things I would consider. The fact that that low inventory thing we've been talking about for 4 or 5 years, it's up slightly from last year, but you can't be kidded by this. It's still low, really low for historical standards. It isn't just a regional issue, it's totally nationwide. Low supply creates upward pressure on prices. Bottom line, supply and demand. Sellers have less competition and buyers often have to settle for what's available, right? Now, I'm not seeing these crazy bidding wars like I've seen in the past, but it's really keeping the market competitive. And secondly, we have this real steady, consistent demand. Despite the mortgage rates being high, in the years, the demand for homes hasn't really disappeared. Life doesn't stop. Buyers need to buy houses. They're growing families. They need job relocations, downsizing, retirees. Buyers are out there. And the NAR data shows that the sales increased by nearly 5% in just 1 month from October to November 2024. I had a big October, November this year, huge. So that's a big sign the market is far from dead. And not forget, buyers today are more strategic. They're waiting for the right opportunity and not rushing in blind. I see them definitely definitely a little slower pace than it used to be. And the third thing I see is a kind of a regional strength. The housing market isn't really the same in every area, not like one size fits all. The Northeast, where I'm over here, seeing a significant price growth, like New Jersey, Pennsylvania here, Rhode Island, New Hampshire, had some of the highest year-over-year gains, with increases as high as, say, 6.8%. So the regional differences tell us that while the market may be cooling overall, there are still pockets of really strong performance. And this is where knowing your local market really matters. That's why give me a call. If you're not in my area, I can hook you up with somebody in your area. So it could be a boom in your area, while it could be a bust or things are slowing down in another area. So definitely know the market you're going into. And then we have the doomers. They fear a crash. They're convinced that the market's heading for a crash. So their main concerns, and the big one you hear everywhere for these people, is affordability. Affordability, affordability, affordability. Rising home prices, yes. Combined with higher mortgage rates, yes. They're putting serious the pressure on these buyers, yes. So even if you saved up for a down payment, monthly payments are getting tougher to handle. I get it. They also say that affordability issues can cap price growth. There's only so much a buyer can pay before the market hits the wall. Well, if they're not going to buy now, it can go up, so they're going to have to pay more later. So that's why people are buying now. But we're seeing this play out in certain markets where homes are sitting longer or price reductions are becoming a little more common. Not in our area, but in parts of Philadelphia, yes. So also these people who are saying the market's going to crash they're looking at the demand that's cooling down. Demand's still there, but they don't see the frenzy. No, that was a crazy frenzy that we saw in 2020 and 21. CoreLogic monthly price growth is barely moving, with just a 0.2% increase in October 2024. That's not exactly crash territory, guys. But it's losing some steam, and that's overall over the United States. That's why knowing where you're buying, what the numbers are, where you're buying is very important. These doomers think that the buyers are being more cautious, and that shift in behavior means homes won't move as quickly or for as much over asking as they did during the peak. Yeah, I can see that, but I don't see it as much in our area. And also they talk about these at-risk areas. Certain metro areas are more vulnerable than others. CoreLogic flagged places like Salt Lake City and Atlanta and Tucson is having a high probability of price declines over the next year. So we'll see where that goes. They're not nationwide trends by all means, but they're worth watching if you're investing in those markets. If you're a homeowner in these areas also, now might be a time to consider your options or just your expectations. Maybe you need to do more for staging, things like that. My take, I don't think there's going to be a crash or a boom in 2025. I think we're going to have something in between, a period of some moderate growth and stability. But let me tell you, that's not a bad thing. It's been crazy the last few years. I welcome a stable market. It's just good for everybody. Good for the buyers, good for the sellers, and even investors who want to plan for long term. It's just a little bit crazy out there. Anybody with cash wins, and that's not fair for everybody. So let's start, say, with some moderate growth. The data points to single-digit price increases, 2 to 4% annually. That might not sound exciting compared to the 20% gains you saw during the peak years, but the deal is this kind of growth, it's sustainable, and that's what its normal appreciation is. It's not driven by speculation or risky behavior, which means less likely to lead into a dramatic downturn, okay? And there is a lack of bubble indicators out there, In the 2008 market, that market there was built on a house of cards, bad loans, speculative buying, and people over-leveraging themselves. But today, these lending standards are much stricter. Buyers have much more skin in the game, and banks aren't handing out loans to just anyone with a pulse. It's a stronger foundation. That's why I don't see a repeat of 2008 anywhere on the horizon. Also, local trends matter more than ever. The national average gives us the big picture, but really, real estate is a hyper-local. You got to talk to your neighborhood realtor. Your neighborhood might be booming while another is really slowing down. So that's why it's really crucial to work with a local expert for my area. I can help you, or if I can help you find somebody for the area you're going to move to. Just follow the trends. And guys, don't get swept up in the doom and gloom headlines you see in these YouTube videos about inflation and this and that. At the end of the day, every market tells its own story. Understanding yours is the key to making smart moves. All right? I don't think this market coming is one of extremes. I think it's a market of balance. So play it smart, stay informed, and you'll be positioned to make the right decisions in 2025. So what does this mean for you? Depending on where you stand, I guess. If you're a buyer, take your time. Days of bidding wars, waiving contingencies, and overpaying, I think are behind us. You have more room to negotiate now. whether that's asking for closing costs, help, or repairs after the inspection. I think these market rewards patience and diligence. Don't rush into a deal that doesn't feel right. And also, I'd say focus on value. I always love focusing on value, finding the right home in the right neighborhood that fits your long-term goals. Or you'll be selling, like all these buyers now who bought in 2021. They're starting to sell now because they rushed into it. They bought something that wasn't part of their long-term goals, okay? Really good time to consider a location carefully. Areas with steady demand and good schools tend to hold value during market shifts, so be aware of all that. And if you're a seller, be realistic about pricing, do some staging, some painting. Buyers are really cautious and informed. They're less likely to overpay. So overpricing your home, you're just gonna sit on the market, which can hurt your chances of selling for top dollar later. And as I always say, presentation is key. Staging, professional photos, strategic marketing are not optional anymore. That's why you need to find a really good realtor like myself who does all these things and doesn't take pictures with their cell phone. A well-priced home with strong curb appeal always attracts serious buyers, even in a slow market. And then also, you want to invest for long-term. Housing, I believe, remains one of the best long-term investments because it's tangible, it appreciates steadily, it's tied to one of our most important basic needs called shelter, okay? So if you're planning to stay put for 5 or 10 years, a modestly appreciating market is actually a good thing. It's less volatile and you're building up equity without worrying about the wild ups and downs of a boom and bust cycle, okay? Makes sense, right? Think of your home as just a long-term investment, not a quick flip, and you'll see the benefits over time. So the key takeaway here, I think, play it smart, whether you're buying or you're selling or staying put, or market rewards those who stay informed, focus on their goals, and watch my channel, because you're gonna get a lot of that. Because the housing market in 2025, it's all about balance. It's not the wild ride of the last few years, and that's okay, because stability, guys, is good. For buyers, it's good for sellers. Maybe we'll start evening out that inventory, and just for the market in general. So if you're gonna make a move in real estate, remember local trends are everything. Talk to a local realtor. If you don't have one, I can get one for you. Pay attention to what's happening in your specific market and don't get caught up in the national headlines all these YouTubers are putting out. They don't apply to your situation. Remember, this market favors the informed, so keep learning and stay sharp. So this has been The Real Deal in Real Estate. No fluff, no spin. If you found this helpful, hit that like and subscribe button. Share this video. Let's get through this market together, and I'll see you on the next one.